Are you driving around your chances of wealth and independence? Getting french fries on the seats and polluting the speakers with the latest podcast you discovered on the history of pickles? Look, collectively, Americans owe over $1.6 trillion in auto debt. The average monthly payment for a used car is over $500. Cars are great, but they can also be dangerous to your financial life. Hey guys, it's Bobby, and this is Financial Story Hour, where we dive into relatable financial stories to empower you to change your own. And with that said, it's story time.
I finally did it. I got the car I always wanted. Leather seats, sunroof, the works. It was more than I thought I could afford, but the salesman showed me that once we spread out the payments over 72 months, it would be manageable. I was so proud. Until the accident. Now, the car's totaled and the insurance payout is way less than I still owe. I'm upside down and I don't know what to do. How did I get myself into this mess?
All right, so let's get some context for Nancy's story. So the car purchase itself was $40,000, and she put $2,000 down. She extended the loan for 72 months, making her monthly payment around $650. And these are just rough numbers, kind of calculated based on a roughly 8% interest rate. So when she had her accident, the amount she still owed on the loan was $35,000, and the insurance payout was only $25,000, leaving a $10,000 difference. Now, it's worth noting that she could have found a $40,000 car, or she could have done what a lot of Americans are doing currently, which is rolling their negative equity from their previous car into their new loan. So, for instance, I still owe $5,000 on my car. I go to the dealership because, it's time to upgrade. And the dealer's like, no problem. We'll roll that $5,000 in with your purchase of this $20,000 car. And now my loan is $25,000 for a $20,000 car, theoretically. Now, I have so much sympathy because Nancy was so excited about a nice car that she was able to get. But a lot of times we let emotions drive our decisions, no pun intended, instead of logically thinking through the numbers. Now, in Nancy's defense, this isn't talked about a lot, and especially if you go to a dealership, they're not going to break down the things that we're going to talk about in this video. They're just going to ask, how much can you afford per month? And really, that's not the only question you should be asking. And in fact, as we've talked about on this channel before, a lot of people don't accurately know what they can afford per month. Now, they made it seem like this was affordable to her by extending the loan out for 72 months, which is a long time, but is, becoming normal. And because it's $40,000, likely the car was new or newer. And so she put a small down payment, she extended the loan out, and it was a newer car, meaning that it probably depreciated like a rock as soon as she drove it off the lot. Now, those are all ingredients for becoming upside down in your car, meaning you owe more on it than it's worth. Now, what could she have done instead? Well, conversely to all the things I just said, putting a larger down payment, making the term a shorter term for the loan, and frankly, buying a cheaper car would all result in her having more equity in the car to start off with, meaning it's much less likely that she would be upside down and find herself in the situation where the car's gone, it's out of commission, and insurance has said, well, we've washed our hands clean of it, and she still owes $10,000 on it. So what's a good rule of thumb when you are buying a car to help keep you in some guardrails to make sure this doesn't happen to you? Well, the Money Guys have a great rule, 23-8, and While I'm not going to say that you have to, that's like a hard and fast you have to, it's a really great guideline, again, to prevent you from letting your eyes be bigger than your wallet when it comes to buying a car. So 23.8, 20% down. You're going to put at least 20% down on your car. You're going to finance it for no longer than 3 years. And the total cost of your transportation, so all your car payments, is going to be no more than 8% of your gross monthly income. So, in order for this purchase for a $40,000 car to make sense for Nancy, she would need to put $8,000 down and taking that remaining balance and spreading it over 3 years instead of 6, which means the monthly payments would be somewhere around $1,000 a month. And to fall within the 8% rule, she would need to actually be making upwards of $150,000 a year to make this purchase fit within 23.8. Now, we don't know what Nancy does and we don't know where she is on her journey, but let's say that she is, in fact, someone younger at the beginning of her financial and career journey. And so she's probably not making $150,000 a year. And she would still need to modify her current payments to fit within this rule. Again, I'm not trying to give handcuffs so much as I'm trying to give guardrails, because honestly, society is not telling our young people to be careful when they buy a car. They're not, even if they are saying be careful, they're not giving any kind of guidance on what can you actually afford, except for maybe whatever you can pay cash for. Well, maybe Nancy isn't mechanically minded. Maybe a $2,000 car would be more dangerous for her, because if it broke down, she wouldn't know how to fix it. It would cost her more to get it fixed. And so we want to have reliable transportation, but we also don't want to destroy our financial future for the sake of having a nice car. So let's look at this as though she is at the beginning of her career and making around $40,000. Now, hopefully I've done all this math right, but let's take a hypothetical salary of $40,000 a year. That means, by my calculations, she can look at cars in about the $10,000 range. Okay, putting 20% down would give her that same $2,000, right? $2,000 down payment. That, and spread over 36 months, that would make the payment roughly $250, which is right there at that 8% of her gross monthly income mark. Now, it is important to note, if you are like in a family or something like that, and you have, say that you have a spouse and you're combining income, but you have 2 cars, the rule does stipulate that this be all of your car payments across your household. So I'm assuming Nancy is a single person and this is the only car payment she's having to deal with. However, theoretically, if she had a spouse, their income would be greater and they would have more room anyways. But right now, it's looking like Nancy should be looking at cars in about the $10,000 range, which, in my opinion, you can still find used cars for about that much that are reliable and will get you where you need to be. Now, of course, follow the other rules, the other things that I talk about in this channel, which means having savings in your budget specifically for things like repairs, things like maintenance. You need to have those built into your budget even before saving for things like an emergency fund, which would be covering this situation. You know, if Nancy had a fully funded emergency fund, then she could potentially just make up the difference for this loan when she's underwater $10,000. But so being aware of what your actual numbers are is crucial. And also taking stock of your situation. So a $10,000 car for somebody who's single and or at least doesn't have any kids and starting out is, I think, reasonable, as long as you go about it the smart way. You don't buy from sketchy Miss Sketcherson across the street, right? You find a reputable person. You maybe have a mechanic inspect the car before you buy it. But as I said before, I'm not mechanically minded, and I now have 3 kids. So my situation is I needed a car that was nice enough to that I was reasonably sure it was going to be safe, right? That it was new enough that I wasn't going to need to replace it in the next year or two. But at the same time, I wanted to preserve our budget for other things. And I think I found a great purchase for that purpose. And I'm hoping that I'll be able to pay it down quickly and start saving up. Hopefully, this is the last car we ever have to pay with a loan, right? But it was necessary for us in these situations. Now, why do I keep harping on about cash flow? Well, frankly speaking, a lot of us don't know where our money goes, and so we can't accurately say whether we have $250 for a car payment or not in our budget. You might think you do, but if you are actively going into the red on a credit card every month, then you actually do not have any margin, and we need to address some of those things, either your income or more likely a combination of spending and savings, to make sure that you are actually in the right place to get your actual number for what you can afford, because a bank is not going to actually go through and look at your budget. A dealership is not going to go through 23.8 with you. They're just going to get you in whatever car they can get you in, because that's their job, right? I'm here. I want to help you get a little perspective before you go out and make that car purchase. Now let's talk a little bit about what can Nancy do from here now that she finds herself in this situation. Unfortunately, options are a little limited, but you first have to assess the damage. So you have to understand what we've already talked about, which is that, how much you owe minus what the insurance actually paid out, and what the difference is between that. So you actually know what your final balance is. And then, of course, you can try to call your lender, explain the situation. It's possible, in my research, it's possible that they will work with you on, a payment or pausing for a little bit so you can figure things out. It's possible that they may work with you on that. But honestly, practically, a solution I see a lot as far as, when I see these situations, there's tons of them on like the Ramsey show. A lot of times the solution is simply, of course, assessing your situation. Do you have any emergency funds set aside? Probably not. Most of us don't. So one thing that you can do is, apply for a personal loan for a little bit more than what that difference is. So in this case, Nancy owes $10,000. Maybe she gets a $12,000 loan and pays off the rest of that $10,000, gets that out of the way, and uses that other $2,000 to go get a cheap car that will hopefully last her while she figures the situation out. Now, of course, that's really a bummer, right? To have had a nice car and then go down to like a $2,000 junker car and paying for it like it's a $12,000 car. But again, this is kind of a temporary measure. This is to get you that transportation, because most of us need transportation to get to work to earn our living, right? And that's a huge impact on cash flow itself. So that's why we have the grace with the 23.8 rule, or why the money guys and I, want you to be able to get a car that will actually do what you need it to do without breaking the bank. However, in this situation, the damage is already done. We're just trying to minimize the damage. So you might take out a personal loan and make up that difference and get another car that will hopefully keep your income going so that you can get out of the situation. And I would pay off that loan as soon as possible, so that the interest rate, who knows what that might be at this time. A personal loan is going to be higher, and so you want to pay that off to get that room back in your budget to start doing this the right way. And then you might go about it, you might save up that $2,000 and then go for that $10,000 car, right? And just slowly work your way back up. Or you might be so scared to death of auto loans at this point that you want to just save up cash. Again, whatever that $2,000 car will let you accomplish is great. And I hope that Nancy in this situation, and you, if you find yourself here, would be humbled to the point of saying, you know what, I want to do this the right way as much as I possibly can. And I know it's really hard in this world right now. I know that the economy is crazy, but we need to learn from our mistakes and keep growing and have a positivity about the future. That's super important, to not lose heart, to not lose hope, and just keep pushing forward, do the next right thing. And so if Nancy didn't before, I would be encouraging her now to really evaluate her budget, evaluating what she can really afford, making choices, cutting things, maybe getting other jobs if she can, to increase that equation, to make her margin bigger so that she can work through these things to pay off the debt, save up for another car. And if maybe you are not in Nancy's situation, maybe you're not upside down right now, but maybe technically you are, but you haven't wrecked yet, maybe you can run the calculations and see, oh, I'm $10,000 underwater in this car, but the car's still okay. Well, there are steps you can take. You can pay it off more aggressively to pay down the principal, to kind of get yourself out of that dangerous situation, right? If you quickly pay down $10,000 worth of equity in the car, or to get that $10,000 worth of equity, then you're in a much safer place if you have some kind of accident. You might refinance if that works out, but I would start making progress to securing your car and your financial life when it comes to your auto stuff. So maybe you are in the position right now where you are looking for a new vehicle, and I just want to encourage you to stay within some guardrails. Now, my goal is for you to understand the rule so that you can know the purpose of it and you can work with it as you need. Of course, it's always best to just kind of like stay within that rule, but say you have a high income and you have no debt, you're in a really good position. Maybe you can stretch that a little bit. I'm not going to say do that. I'm just going to say do what's best for you and understand fully your situation. And I hope that you will continue to do research, maybe reach out to someone and navigate this decision wisely. Because even in the best situations, even if you can afford it, think of the difference between a $650 a month payment and a $250 a month payment. That's $400 of monthly income that you could be doing something more productive with, maybe than paying towards a car. That much invested over the long term is going to be crazy. It's going to have a great impact. You could be saving some of that difference for the next car purchase, so you don't even have to use debt, which would in turn save you money on interest. So there's a lot of factors to decide here. And I hope that you will continue to do research and make wise choices. And if you need someone to help you walk through that, I would love to talk to you. Now, maybe you are in a bad situation right now. Maybe you're researching this because you are in Nancy's situation right now. It's not fun and it's not easy. I hope you'll reach out and let me encourage you and give what advice I can. And if you need somebody to just walk through it, then again, reach out, message me, go to newstoryfinancial.com, send me an email, whatever that might be. I just want to encourage you and help how I can. And remember, no matter where you're at in your journey, no matter the mistakes you've made or haven't made yet, you can change your story. So I hope you guys are encouraged, and I'll see you in the next one.